Hey everyone, it is Julie here with TipRanks. In today's video, we're taking a look at 3 stocks that were recently added by billionaire Ray Dalio to his fund with Bridgewater Associates. Now, all 3 of these stocks come in as a strong buy with double-digit upside potential and ratings from 5-star analysts. So in today's video, we're going to take a closer look at each company and what they do and what has analysts feeling so bullish about their future. And just before we get into all of that, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and that you subscribe to the channel as well. Don't forget to stop by daily every morning before the opening bell for my pre-market morning update and again in the afternoon for Richard Allen's mid-market update. Now, with that being said, let's get right into these 3 companies, starting off with Aptiv PLC. They trade under the ticker APTV and are currently priced at $139.66 per share. Aptiv works on the fusion of high-tech and automotive technology. The company develops software, networking, and computing platforms geared toward improving vehicle safety and efficiency. They have more than 180,000 people across 124 manufacturing facilities and 12 major technical centers worldwide. With a presence in 44 countries, they address mobility's toughest challenges. Their solutions focus on advanced safety, autonomous mobility, commercial vehicles, a variety of connectivity sectors, and electrical distribution systems. In January of this year, the company unveiled ADAS, its open and scalable platform to enable software-defined vehicles while reducing complexity. The platform delivers high-performance computing power to enhance connectivity and move a step closer to autonomous vehicle driving systems. The platform will also allow continuous updating over the vehicle's lifespan. Now, just at the beginning of May, the company released their first quarter earnings report for 2021. They showed $4 billion at the top line, up 20% year over year. Their operating income was $437 million, up almost 11% year over year, and earnings per share came in at $1.03. The earnings per share was down from the over $6 reported 1 year ago, but was in line with the $1.04 reported in the 2 most recent quarters. They are confident in their 2021 outlook that they are well positioned for continued recovery outperformance despite some near-term challenges. They say there is a strong consumer backdrop that sustains post-pandemic recovery, and OEM production outlook remains strong, with global vehicle production supposed to be up 10%. In the first quarter, Ray Dalio's fund purchased over 250,000 shares of this stock, increasing their position by about 1,500% and putting their total position at about $35 million. Now, looking to the analysts, we have 13 current ratings on the Aptiv stock. And it does come in as a strong buy with an average price target of $170 per share, which would be an upside of nearly 22%. And of course, many of those ratings were reiterated after the earnings report a couple weeks ago. We can see the only sell rating is 2 months old for a downside of 14%. All of the ones in the recent weeks range between about 7% upside all the way to 46% growth potential. And one of the ratings on the higher end of that scale comes from Brian Gazwale from Raymond James. He states that business trends are solid, and a combination of typical conservatism and several uncontrollable industry dynamics like supply chain, input costs, etc., leave ample opportunity for upward revisions and beats and raises throughout the balance of the year. We continue to see APTV as one of the best positioned auto tech names to capitalize on the growth of green, connected, and autonomous technology adoption. Brian's price target of $200 on the stock would be a 43% growth potential from current prices. The second company today is Vroom Incorporated. Trading under the ticker VRM, they're currently priced at $43.96 per share. Vroom, of course, is an online retailer that specializes in used cars, as well as parts and accessories, insurance, car rentals, and purchase financing. In short, Vroom is an online one-stop shop for automotive needs for customers who aren't looking to buy new and are in the US. The company is benefiting from an accelerating consumer adoption of auto e-commerce. They say that the coronavirus helped accelerate already powerful trends, and there's now 61% of people that would be open to buying a car online. 93% are using personal vehicles more, and 40% are considering buying a car. And the used auto industry is actually a massive market that is barely penetrated by e-commerce. Compared to other retailers, e-commerce penetration for the used auto industry sits at just 0.9%. And it helps that this market is ripe for disruption, given the high fragmentation and high degree of consumer dissatisfaction. 81% of people said that they're dissatisfied in the car buying process, and only 9% trust the profession of car salespeople. And I'm very sorry to all of the used car salesmen out there, but I think a lot of us can understand that stressful and high-pressure situation of shopping for a car. Now, just on May 12th, the company released their first quarter earnings report, making it their fourth earnings report since becoming a publicly traded company last year. And this quarter marked the third consecutive sequential revenue gain, seeing the top line reach $591.1 million. Their e-commerce accounted for $422.3 million of that revenue, which was up 81% from the year before. And their total online vehicle sales reached over 15,500 units for a 96% year-over-year gain. Ray Dalio's fund took a new position in the Vroom stock over the first quarter, purchasing about 47,000 shares worth approximately $2 million. Covering the Vroom stock, we have 11 current analyst ratings. It comes in as a strong buy with an average price target just over $53, which would be just shy of a 22% upside potential again. And once again, most of those ratings all coming after their latest earnings report. We have one hold rating with a potential downside from 2 months ago, one buy rating from 9 days ago that sits at 0 as we've already hit that price target, and a lot coming in between 20 to 36% growth potential. And one of those price targets comes from 5-star analyst Seth Basham from Wedbush. He says that Vroom delivered solid first quarter results that exceeded buy-side and sell-side expectations. Vroom is not only benefiting from strong market dynamics, but is also earning higher margins by nearly eliminating bottlenecks associated with its post-sale support processes and is investing to remain ahead of the growth in this and other key areas. With these strong results, solid guidance, and continued improvements, we believe Vroom could top its unchanged fiscal year 21 growth goals of over 100% e-commerce units and 200% gross profit, and it could raise these targets with their second quarter results. Seth's price target of $60 from the Vroom stock would represent a 36% upside potential. And the third company on our list today is Tempur Sealy. They trade under the ticker TPX. They're currently priced at $35.97 per share, and this stock also pays a dividend with a current yield of 0.78%. Tempur Sealy, of course, is the world's largest bedding provider. The company develops, manufactures, and markets mattresses, adjustable bases, pillows, and other sleep and relaxation products. They combine a proud history and groundbreaking innovation and holds some of the most highly recognized brand names in the industry, including Tempur, Tempur-Pedic, Cocoon by Sealy, Sealy, and Stearns & Foster. Their Tempur-Pedic holds a dominant worldwide premium bedding market position, whereas their Stearns & Foster targets that high-end brand, and Sealy is the #1 bedding brand in the US. Their direct-to-consumer channel on TempurPedic.com is the most profitable online bedding company in the world. They also have their omni-channel traditional bedding products, but also compressed bedding products like their Tempur Cloud, Cocoon, and Sealy Posturepedic foam. And these direct-to-consumer channels are seeing a lot of growth. They saw 62% growth in the first quarter of 2021, and they've seen their global direct channel sales grow 117% over the last 2 years. Tempur Sealy shared their first quarter earnings report at the end of April, and they showed a 27% year-over-year increase in total revenue, along with an earnings per share of 62 cents. The earnings per share number, while down sequentially from the fourth quarter, was up 120% year-over-year. The company reported a substantial year-over-year increase in net cash from operations from $15 million up to $86.3 million. Now, this is another stock that Dalio's fund took a new position in the first quarter, purchasing nearly 200,000 shares, which today would be worth about $7.25 million. And the Tempur Sealy stock currently has 8 analyst ratings, coming in as a strong buy with an average price target of $46, which would be nearly a 28% growth potential. All of those buy ratings coming after their latest earnings report range from 19.5% upside all the way up to 39% growth potential, which was iterated by 3 different analysts. And one analyst covering the stock is 5-star analyst Peter Keith from Piper Sandler. He says that Tempur Sealy's competitive positioning remains at an all-time high. The bedding industry has never been healthier, the consumer is in excellent shape, and international should show sequential improvement in the trends into 2022. While supply chain constraints have resulted in some disruption, TPX expects headwinds to moderate substantially by the end of the second quarter. Keith was on the high end with one of those $50 price targets for a 39% growth potential. So there we have 3 stocks recently purchased by Ray Dalio's fund in the first quarter, all coming in as strong buys and all with some double-digit upside potential from 5-star analysts. I'd love to hear your thoughts on these 3 companies. Are there any that you're already invested in or have your eye on? Or what are your opinions all around? You guys know I always love hearing from you. Please keep in mind, though, that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure that you're always doing your own research and due diligence before making any investment decision. If you made it all the way to the end of the video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a fantastic weekend, and we will see you back here next time.